Hi folks, welcome back to the channel. This is Jason, host of Fighting Words Financial. Let's talk about Li Auto today, the Chinese new energy vehicle maker. I've gotten quite a few requests to make a video about this company, and I'm happy to do so. I really need to address something first though, and that's my own personal bias for this company. You see, I shot a video earlier this week and I was in the process of editing it when I realized that I was coming across in my analysis of Li Auto from a completely biased point of view, which is something that I don't really want to do on this channel. My bias is essentially this. I love the idea of an electric vehicle future, really because I just think that electric cars are friggin' cool, and I erroneously thought that Li Auto was not really committed to the same type of vision based on something that I thought was really fundamental to the design of their powertrain. I am utterly fascinated by the electric vehicle and sustainable energy revolutions that we as a society, really we as a planet, all of humanity finds ourselves in the midst of right now. I'm obsessed with navigating what I believe is going to be one of the largest destructions of enterprise value since the Industrial Revolution and one of the largest transfers of wealth in human history. I plan on being on the right side of this transfer, and if you're watching this video, I'm sure that's what you're planning too. With that in mind, I think I may have developed blinders a little bit when I first looked at Li Motors, when I looked at their approach into this newly developing market. I didn't like the company before I even took a really good hard look at them because I erroneously thought that they were just a hybrid maker and weren't committed to electrifying transportation. I was really wrong on both counts and it made me biased, so I ended up scrapping my original video and starting over. So keep that in mind as I build my analysis for this company, and just because I recognize a bias doesn't mean that it's still not going to be reflected in this video in some way. Folks, if this is your first time here on the channel, please give us an early like and subscribe and hit that bell to get notifications so whenever I put out new material, you don't miss a thing. So I'm going to take a cue from another YouTuber that I follow, Tom Nash, and I'm going to bottom line a couple of things about Li Auto up front, and then afterwards I'm going to tell you guys why I have these thoughts. First, if you watched my previous video that listed out the 1,600 or so failed American automakers over the last century, you know that every new EV company has more challenges and more reasons to doubt their survival than reasons to believe that they're going to be the next goose that lays the golden egg. In that respect, Li Auto is no different than their domestic rivals, Nio, Xpeng, or any of the other 36 companies currently making electric vehicles in China. Number two, they make a fine vehicle that is reviewed well and customers seem to be happy with. And if a company doesn't do at least that, then they have no chance at all of success. Number three, they have a vehicle production strategy that addresses the range anxiety issues that many people have with purchasing an electric car and seem to be particularly acute in China. Number four, they only have one vehicle model right now, the Li One full-size SUV, and it is selling well. In September of this year, the Li One had 3,830 insurance registrations in China. That's more than the Nio ES6 and more than the Tesla Model X. Now, these cars are not really competing for the same customers, even though they are often compared as they are. Now, if I sound very neutral and non-committal at this point, that is by design. I'm not really sure that this company really has the same potential for success that Nio and Xpeng have. Now, of course, I could be very wrong about that, just as we could all be wrong about our favorite stock picks. But I'm going to present a neutral/leaning bull case for Li Auto, and I'm going to let you make your own decisions. As I do that too, keep in mind that based on my research, there isn't anywhere near as much information out there on this company, and some of the technical questions that I had, I was not able to find answers for. This is also a good time for me to disclose that I don't own any Li Auto stock. I'm not saying that I won't own it in the future, but it's not likely that I'm going to do so anytime soon. Alright guys, here it goes. I'm going to lay out what I know about Li Auto and the case that I think that they have for the future. So one huge positive that Li Auto has going for it is its founder, Li Xiang. And I hope I'm pronouncing that correctly again. I don't actually speak Chinese, but Li Xiang. He has a story that Americans like myself are raised on, and these are the stories that we are trained to admire. He's a man that comes from humble beginnings. He's a little bit rebellious, and he's not afraid to take chances. He is someone that is known to think and approach problems differently, somebody who learns from his mistakes. So much that I think that he's probably been forged as much by his failures as he has been by his successes. And as any entrepreneur knows, you learn more from failures than you're ever going to learn from success. Li Auto was founded in 2015 by Li Xiang, who is considered another icon in China's entrepreneurship elite, like William Li and He Jiabeng, the founders of Nio and Xpeng. Li Xiang is a serial entrepreneur and often compared to, I'll let you guess. He's founded a couple of different companies, including AutoHome, which is an online platform for auto sales, and it's listed on the NASDAQ. Like William Li and He Xiaopeng, Li Xiang became interested in electric vehicles by Tesla's arrival in China and was supposedly one of the first Tesla owners in China. Reportedly, William Li initially tried to get Li Xiang to be a co-founder in what was later to become Nio. Ultimately, Li Xiang turned down the offer due to what he described as strategic differences. But he did supply $15 million in initial funding and became one of the founding investors in Nio. It isn't known, or at least I couldn't find, how much of Nio Li Xiang owns today. If you watch the video that I made on Xpeng where I described the funding universe and how it operated for both Nio and Xpeng and how their sources of capital were intertwined with these huge multinational corporations, wealthy individuals and investment firms all making direct investments and lending money to both Nio and Xpeng at the same time. The fact that the founders of Li Auto and Nio have this close relationship and cross-ownership shouldn't be a surprise anymore. You guys should all realize at this point that none of these people funding these companies have an interest in seeing any one of them fail, and that is one of the reasons that none of the big three domestic EV players in China, Nio, Xpeng, or Li, is actually competing against each other in reality. They're all competing against Tesla, or they're trying to exploit a market space that Tesla isn't in yet. Li Auto is backed by the usual parade of private equity groups, some of whom also back Nio and Xpeng, but they do have some interesting corporate partners. Some of China's largest consumer service app companies like Meituan, I hope that I'm pronouncing that correct, and ByteDance, which used to own the short video app TikTok. Actually, I'm not sure of the state of that deal now. They might still own it. Li Auto has chosen to develop its own vehicle manufacturing facilities, engineering, and design services located in Changzhou, Jiangsu province. Their self-owned factory has a capacity of 100,000 units per year. Li Auto is not reliant on a partnership production deal. They have a corporate headquarters and research and development center located in Beijing. As I stated before, Li Auto only makes a single vehicle model, the Li 1 SUV, which is erroneously called a hybrid vehicle, and I'll explain more about that here in just a bit. Li Auto announced on October 18th of 2020 that it had delivered more than 20,000 Li 1 SUVs over the past 10 months. According to the data from the China Automotive and Technology Research Center, the Li 1 ranked first in sales for the new energy SUV segment. The Li 1 SUV is classified as a new energy vehicle under that new energy vehicle standard in China. New energy vehicles include fully electric or hybrid powertrain models. The Li 1 SUV is often lumped in with the hybrids, but this is really not an entirely accurate technical description of their vehicle. While most of China's recent automotive startups are building fully electric vehicles, the Li 1 SUV allows for the battery pack to be charged with either plug-in electricity or an onboard gas-powered generator. The drivetrain, the thing that actually makes the wheels move on the SUV, is fully electric. It is not a hybrid design like a Toyota Prius that has a drivetrain powered by the battery at low speeds and an internal combustion engine under high loads. No, this drivetrain is completely electric. Li Auto calls this design EREV, or Extended Range Electric Vehicles. This technology is attracting interest from Chinese consumers. The design is actually a lot like the extended range electrical drivetrains for Class 8 trucks that both Hyliion and Nikola aspire to produce at some point. The Li 1 is powered solely by its electric motors while it's driving. As the battery is drained, the battery is recharged en route with the onboard range extension system that includes a dedicated 1.2-liter turbocharged internal combustion gas engine and a 100 kilowatt electric generator. The electric drivetrain of the Li 1 consists of a 140 kilowatt rear-wheel drive electric motor powered by a 40.5 kilowatt hour battery pack. Now this is definitely a battery pack that's not as large as some of the purely electric vehicles out there. The SUV also includes an 11.9 gallon fuel tank for the dedicated gas engine generator. This small combustion engine is used to generate electricity to charge the vehicle's battery and extend the overall range of the vehicle. When asked why Li Auto decided to go this route, Li Xiang explained in an interview that limited access to EV charging infrastructure in China is the one reason for designing its SUV with this range extension system, rather than building a fully electric vehicle like most of China's startup automakers are doing. So roughly 70% of American households have access to a parking spot where charging infrastructure could be easily installed. It's estimated that only 30% of Chinese households have this same access. This infrastructure limitation is spurring some very innovative approaches to address range anxiety, like the Li Auto range extension approach and Nio's battery swapping network. Now, the Chinese government is actually pouring a lot of money into developing a charging infrastructure across the entire country. And I'm not sure that either of these paths to address range anxiety is actually going to be permanent. I think there's indications for both companies that they're positioned to change strategies if that need arises because of a change in infrastructure. What I mean by this is I can see Li Auto abandoning the range extension system eventually, modifying its designs by upgrading the battery pack, taking out the gas tank and the generator, and going solely electric. With the current setup, the Li One delivers an NEDC range of 800 kilometers or 497 miles. As discussed before, like any NEDC estimate, it's so optimistic that it's not even darn close. So knock off 30% from the estimate to give you a more realistic number of 560 kilometers of range or 347 miles. I really wasn't able to find out as much about Li Auto's software and hardware systems as I would like, and most of the information that I did find was a bit repetitive. The Li One does have an assisted driving system right now, and it's not considered cutting edge by any means, but they did pick NVIDIA over Mobileye and are planning to partner with NVIDIA to deliver the NVIDIA Drive EGX system in the next generation of Li Auto vehicles. A number of EV startups in China have actually chosen to partner with NVIDIA when it comes to self-driving technology, a direction that notably Tesla is not going in anymore. Like Tesla, the Li One supports over-the-air software updates, and the company takes feedback from an active owner community and tries to address concerns in each update. In the last 10 months, Li Auto has released 9 separate over-the-air updates and continues to improve their user experience. As I've stated before, Li Auto only has the one vehicle model for sale, and they're not planning to introduce a second model until 2022. The success of this company hinges on the appeal of a single product right now. This could be seen as a negative. However, that one vehicle is the leading vehicle in its class. It is really seized on a niche in the market and dominates sales in that market segment. So back in July, Li Auto raised over $1.4 billion in its initial public offering, and its shares are listed on the NASDAQ under the symbol LI. I took a look at the financials, which came out recently, I think on the 13th, and Li is actually sitting on a mountain of cash at the moment. And Li Xiang has made some recent comments about this, and I praise his caution regarding how investments have been made for this company. Now, you can't really see the rest of the screen grab here, but total liabilities for Li Auto are pretty low, and they have more cash on hand than they have in debt. Shareholder equity is over $20 billion, and their balance sheet looks better than either Nio or Xpeng, especially Nio. So neither the balance sheet nor the income statement have a lot of history to them, but they do show you what we want to see with a company that is growing revenue quarter by quarter. And it also shows what you would expect from an EV startup, which is high capex, including $335 million in R&D spending. Additionally, we see 3 quarters of improving gross margin and a slight dip in profit margin due to increased operating expenses as they expand their operations. Look, the financials aren't all rosy, but they have a lot of what we expect in a startup. But the losses are narrowing and margins are improving, which is what you want to see at this stage. Out of all of the 3 big Chinese EV startups, the financial condition of Li Auto actually looks the best. Alright folks, those are the facts and my thoughts to go along with them. Of course, it's up to you to do your own research and make your own decisions. Unfortunately, there isn't as much information about Li Auto as there is out there about, Xpeng and Nio, so it was a little bit difficult to dig up original research in this respect. I don't have a position in Li at this time. Although, when I stepped back and I looked at it objectively, there is nothing in their financials, there's nothing about their philosophy, nothing about their production methods, nothing about their way of addressing range anxiety that makes me say don't invest in this company. I just haven't done it because I was personally biased against it before. I'm not saying that I'm immediately going to go out and run out and have a position in this company now, but it might be possible that I would do that in the future. I'm probably going to wait another couple of quarters to see how their margins improve, what they're doing with some of the mountain of cash that they're sitting on, and whether or not they're actually coming up with new vehicle designs. Anyway, folks, those are just my thoughts. Feel free to tell me how wrong you think I am in the comments below. I look forward to seeing you next time.